Hey everybody, good morning. Good morning, everybody. Channel member Dan, channel member Rob, channel member Brian, channel member Jason. Thank you for becoming a channel member. And channel member Arturo, channel member Amy, channel member Sledge. Welcome, everybody. Glad to have you this morning. And retail sales numbers are out. Market's moving around. We got futures contract rollover. Hey, channel member General Rush. Good to have you, sir. And well, things are moving. We got the contract rollover. Don't forget that kind of does add a little juice to the futures market. If you've been watching that, set my monster off the side there while I sat down, and I had to put it back on the screen. So make sure that if you want to chat with me, click the button over here in the corner. Be a subscriber on that channel. You can chat. And if you want to be a channel member, link is in the description down below. And if you need the roadmap line when we get there, you're like, well, roadmap line, what? The orange line I'll use all through the charts today. If you need that, you want that, easy button, $5, links in the description down there. So that's all the things. That's all the things. And welcome to the show. So, like I said, we have retail sales coming out this morning. And let's grab her right here. So we've got core down just a little bit, and retail sales up just a little bit. So we were expecting a negative 0.2, and we got up 1.1. That's a pretty big swing, actually. Pretty big swing from the expected to the actual. Right there, expecting negative, got a positive. Everything's good, right? Cut a quarter point. Everything's good. Yeah. I don't know. Remember FOMC meeting tomorrow, 2 p.m. That's the big show this week. The big show. Right here, 2 p.m. This is the thing you should be cautious about. That's certainly what I'm cautious about right here. What are we going to do? Are we going to pop it? Are we going to drop it? If they cut a quarter point, I think the market may be disappointed. I think the market expects a half a point. And I've seen lots of statistics and lots of trackers and lots of all these things. People are saying that the market, about 55%, maybe 60%, expects 0.5. That means is the market and the algorithms and all the things going to be disappointed with a quarter point cut? I don't know. If we get a half point cut, are we going to be like, oh man, they said a quarter point and everything, we got a half point and everything's great, and we launch off, go higher? That's the big stuff to be watching right here. Right here. I will be live today at 1 p.m. I think it is. Hold on one second. Let me double check. I just got a message about it a minute ago. Go pop over. Good grief. You gotta be kidding me. It's so much stuff. Where is today? Right there. Yeah, 1 p.m. today. I'll be live with Roger Scott. It's not my thing, it's his thing, but I'll be live with him. And I do plan to give out a trade at the end that I plan on, for those of you in my Discord and Crash Protection or Termite Trading Lab, you should know what I'm talking about, the trade I've got on. But I'll share that trade. So if you come visit us today, maybe I'll throw it in Discord after the show. But I'll throw the link to the presentation in Discord as we get closer. If you're like, Discord, how do you even get there? $5, links in the description. You pay the $5, you become a supporter, basically. Buy the roadmap line, you can get into Discord. So that's kind of the way that all works. Anyway, hey Jim, hey Darren, glad to have everybody. And yeah, the numbers are never inflation adjusted. Come on now. Anyway, all right, that's what we got. So that's the big show this week. Thursday, just normal unemployment claims we get every week, and Friday, nothing economic news wise. We do have a couple small earnings. We're mostly in the S&P 500 buyback blackout window, so buybacks are ramping down through the end of the month. That's usually why we see S&P underperforming into the end of the month for September, into the quarter, we do have a giant OPEX uh, estimated, I'm trying to remember the word, estimated to be the largest OPEX in history as far as notional control of stocks. That means take the strike price, value, and the number of options, multiply that together. That's the notional value of control for those options. So that's how they get these giant, like $1.8 trillion of options expiring. So it's not actually 1.8. People didn't actually spend $1.8 trillion of options. They don't really have a way to calculate that, but they do have a way to calculate the notional, which is take the options, take the strike, multiply it together. That's where you get the notional. So when they talk about, so and so bought, $2 billion worth of options, they're just talking about enough options to control $2 billion worth of stock. So it's a mainstream media trick that I don't necessarily agree with, but it's become kind of commonplace. So just roll with it. That's the way everybody talks about it. So anyway, alrighty, moving on to the charts. And I've got the double dip list up instead of the morning monster movers. All right. For you in Term Trading Lab, I focused on getting the video replay out instead of making the double dip list for you. I will work on the double dip list if somebody will hit me a reminder. All right. It won't take me but a minute, but I just got to remember to do it. Alrighty. So Microsoft popping. Everything looks pretty spicy this morning. So cash index, when we open up in about 7 minutes, we're set to go higher. I mean, that yesterday just kind of churned around a little bit. We didn't go lower, we didn't go higher, we didn't really do anything. But I think we're still set to get the pop. If we get up here, this is kind of my warning right here. If we get right up to this level, or even in just the general vicinity of this level, right there before tomorrow at 2 p.m., that's the reaction I expect to get. Right there. All right. I mean, this is very clear right now. If we do that before 2 p.m., and that's Eastern, if that before 2 p.m. Eastern, this is what I expect. All right, everybody clear? Can be tomorrow's the big show. All right. Let me look. S5TW. We've gone all the way from 26 all the way up to 72 in 4 days. If you're unfamiliar with what this is the stocks above the 20-day moving average for the S&P 500. That went from all the way down here, all the way up here in 4 days. That's pretty wild. S5FI, we went from down here up to here. Down at 52, up here to 74, 75. We don't typically go above 80 very often, and don't usually stay up there for very long. This is a giant market oscillator, what these are. Stocks above and below their moving average. We've always got money flowing in and out of markets, right? So just kind of this set right here, this is very fast. This is a little slower. And then the slowest one, stocks above their 200-day. We've been hovering in this zone pretty much the entire year. Pretty much almost for an entire year. We were down here in October last year. We're up here just shy of October this year. Now, as you can see, this usually goes to the top, goes to the bottom, goes to the top, goes to the bottom. We didn't even break out the top right here above 80, where 80% of the S&P 500 stocks were above their 200-day moving average until this March-April timeframe. And we just kind of been hovering a little lower. We might get one spike above it, especially if we get a pop tomorrow, and then watch out. We'll probably flush this baby down to the bottom. The market can't stay revved up at the top forever. It just can't. Like but nothing. It's so cliche, but it's like nothing can go up forever. Yeah, we have to flush it out so we can go higher again. We have to flush it out so we can go higher again. And we may be set up for an epic flush out this time, but we'll see. In my S&P 500 futures chart, there's the contract rollover I was talking about. There's the gap up. We'll go fill that gap eventually. We don't like to leave gaps on the futures chart. We'll fill that gap eventually. This one over here, it took us, we went up here and then we came back and got it. We may go up here and come back and get it eventually. Now, we could just rock and roll tomorrow and go cruising up here. And then we could be up there into the election or whatever. But I don't really expect much over 6,000. I think 6,000 may be a long-term top if we go hit that level. Now, we could get a blow-off. It could go overexcited. Could go beyond everybody's imagination. Roll way into the first part of next year before we top out. Like, things just get super excited, super optimistic, and then the wheels fall off, and then we go down. So it's like, is the path exactly clear? No. Unfortunately not, but I have some high probability guesses, like this one right here, where if we get up here at the FOMC meeting tomorrow, it's a really good opportunity to retrace again. Now, that doesn't mean we won't go higher. It doesn't mean that's the epic crash start. We've got to see what the price action, what happens after that. This is so far unfinished. That's just one move up, retrace, next move up. This could actually get some nice extension on it. I usually do the bias at the end, but let's talk about this just really briefly here. What we've got cooking. We moved up off this low from back here just a few days ago. I mean, just back here in August, like 5th of August. Moved up, retraced, didn't hit any kind of ideal retrace fib on S&P. We did on NASDAQ and we did on Russell. But this sets it up for a potential, just if it's just a 3-wave up, right there at 6,000. Now, if we get the extra excited, potential, all the way up here. 6,300. That, when I talk about a blow off, extra excitement, I mean, that's what I'm talking about right there. That's going from 5,600 to 6,300. So we're talking about 600 points up. That's pretty good. Pretty good. Another 10, 15% on the market. Not too shabby. We could just go cruising like that up, and we'll probably have some pullbacks along the way, and blah blah blah. But that may end up being the top that lasts for a little while, like could last for 10 years. That's what kind of top we're looking at right here. So, hey, thanks, Ed. Thanks for becoming a channel member. There's the market open. There's a little gap up. Oh, getting close to all-time highs. So those are the fib line targets right there that I'm looking at 59.66, 6,100, 6,300. That's for S&P 500. All right, you don't have to do any math between futures and S&P. That's what we got. Now, NASDAQ index. Let's just go to the cash index. I don't usually work on the cash index, but here we go. We did a measured bounce here. This sets this up. This is the reason I'm kind of optimistic on going higher right now. It sets us up with the potential to pop right up in here. Right up in here. So we're looking at 22.9, 21.8, and 2100. Those are the levels. Don't really expect much more than this. That'd probably be a pretty good top. And then RTY had that same sort of move right here. I typed it's RUT. That's what it is. That's the actual index. I was like, wait, I typed the future ticker. We got this low, this high, 618, and the roadmap line, same point. If we do this one, oop, I clicked the wrong thing. Wrong thing. There's our levels here. 2300, 2380, 2475. Those three levels. And we're not far away. Now this one might stop here. Like this is a caution right here. We could stop right here. The reason for that, this is all corrective action. The higher high all the way up here. This could be the final move on Russell, stopping only at 2300. So we could underperform on Russell, even though it looks pretty spicy for a big breakout, but it might not do it. So I just want to throw these out there as potential upside targets, and we could, tomorrow at 2 p.m., it could be a pop and a drop. So be careful. Be careful out there. Oil, look at this reversal shaping up. Let's go back over to the actual chart. I've got everything drawn on. Nice reversal so far. It's a V bottom. Now we've got that large candle right there. We're gonna have to take that back, get back in the wedge, move to the top of the wedge. Is this it? I don't know. Honestly, can't say whether that's it or not. Like it's kind of bouncing right off that support, but we've got a long way to go to get through the 618 and the roadmap line, then above the downtrend of highs to start working on higher targets. We have lots of higher targets up there. I don't know. Price will tell us. I did go long out into 2026 with some UCO. Did a spread. How do you play oil? You can play it with this way. This baby is leverage, so the leverage cuts both ways. Now you'd be like, what did you do? I bought a $27 call and I sold a $37 call. $10 potential for I think it was like a $3, $4 cost. So it's like a 3xer potential, like 3 times my money. If we pop up here, which look, I mean, it wouldn't. We were just right there at 36 back there in June. It's not even a stretch that we get up here some point between now and 2026. Not too much of a stretch at all, I don't think. Anyway, gold. Probably reaching for the sky. It looked like it was going to be spicy yesterday, and then just sat there, not really doing a darn thing. Today, little red hammer, whatever they want to call it, whatever you want to call those candles, but just more consolidation. We could consolidate another week or two, and then make another leg. We've been kind of doing that. It's like this box and leg situation. And we legged up here. This was a big leg. Legged up here, big box. Try to break out. Retraced, try to break out, retraced, leg up, box, leg up, box, leg up. I don't know. We'll see. Bitcoin, that may have been all we needed for the retrace. Didn't touch any kind of ideal fibs. Unclear. Could it pop? Yeah, it could. Might it retrace deeper? Yeah, it could. So the risk here on Bitcoin is this. Well, first off, look at that. Broke through the 4-hour, back tested, moving up. That's positive. So you run that fib line. If we can break through this 618, we might see that 61,000 area, or even get spicier on the upside. If we turn down here, This sets up the 3-wave situation. This was kind of a 3-wave down, so that makes me cautious here. Put it right in that 618. If Bitcoin starts turning down today, look at that 1272 and that 618. The 618 of this move up and the 1272 echo of this first move down from here, exactly at the same level right there. I know there's lots of stuff drawn on the chart for people that don't understand all I'm doing. It's okay. Stick around a little bit. Maybe you learned something. So what we're doing a projection off this high down to this low, bringing it over here, and then extending it to the 1272. It's 27.2, 127.2% bigger. Why? Because fib numbers tend to work. Those are fib levels. 127.2 is my favorite extension. We may see that extend right down there to the 618. If we do, I really, really, really want to hold that level. Hold that and go up. If we start down below it, we're probably coming down here. 51. Somewhere in that 50 to 51,000. We break below here. Simple as that right now. Alrighty. Looks good on the futures chart though. Ethereum still looks like it wants that one more little reach down. That was a 3-wave up. Ugh. We could do one little flush on Ethereum. Now, this is why I'm concerned about Bitcoin. We may do another flush on Ethereum that could take Bitcoin down to that 618. Then everything could reverse. So we do need this looks incomplete without a low lower than this low right there from August 5th. That's on the spot market for Ethereum. All right, looking at the dollar. Holding support really well at that prior low. I do kind of expect this to break down and go on down further. It's my primary expectation. We could find support here and turn higher, but I think we're going to break it down and go lower. Rate cuts are inflationary. Rate cuts are kind of bearish. They indicate there's problems. All right. We don't rate cut into great times. I don't care who out there does what kind of math on whatever. It usually is indicative that we've got problems. That's why we do rate cuts. And then the market sorts through those problems and then we can go higher from there. But usually we end up in a big dip first. Now it could be that we pop and then dip in the micro. But usually rate cuts are a sign of financial stress on the markets. Be careful. My examples, every time since I've been trading that we cross the Fed funds rate crosses above the market rate. The orange line is the Fed funds rate. The blue is the market interest rate. You didn't know the Fed's always chasing the market. Guess what? Holy cow, it's counter to the mainstream media narrative. Right here. First one, .com bust. Next one, housing, great financial crisis. This one right here, it was the rates freak out into COVID right there. This one, what's the story going to be? Here's the real rate, 3.5. There's the Fed funds rate, 5.3. They're way over their skis right now. They need to cut to bring it back to any semblance of back in the even being close to the market rate. It's indicative of a problem though. I mean, look what we did over here. I mean, this I guess that one's the closest we have. That was just down to 5.8 and we were at 6.5. That wasn't even a point. Right now look at that. The market rate is 3.5. It's almost 2 points lower than the Fed right now. It's 1 3/4 point. I don't know that we've ever had that big a discrepancy. Pretty wild. I think we're just one card away from the whole house of cards coming down. What's the card? I don't know. Lots of things out there. All right. Oop, wrong chart. Flip back over to looking at the Japanese stock markets. They were dipping. Now they tried to go lower. Look at those tails. Somebody's buying that baby. It's right at the 618. I like that. That's nice potential. Nice potential for another pop. Take it right back up in this area, right back, consolidate, and then break through. That'd be really nice. If we can get through these highs right back here. See, this was the flush in August. It spilled over in our market. There was the flush a couple weeks ago. Spilled over in our market. If we can pop, hopefully we get the spillover in our market and we pop and go up to all-time highs. What was popping and what was dropping on our market? FNGU. This has the measured bounce potential. We've got to break out above this high right here. We do have a gap down, extra resistance right there. This is a leveraged on tech, big tech, leverage. 604 would be the upside if we can get through those two resistance levels. Microsoft. Ooh, if we can close the day up here, this looks pretty spicy for going higher. It's definitely spicy. Statistics on that, 84%, 32 trades is a statistically significant population of trades. 3.4 profit factor. That looks pretty solid for getting right up there. If we close the day above the 618. I would like to see it, honestly. I'd like to see it. We have Amazon already fired off last week. Looking for the breakout on that one. Got that one high right there. We get above that. That's pretty solid for a move up to that area. Despite all the stuff I've said about potential for pullbacks. Yeah, be careful. I'm perma-cautious. So some of you want that tool. Some of you are like, how do I do those statistics? I spent a lot of years figuring out how to do that, and I'm not selling it. Not at this point. GEV, dang. There is no charts to really predict that move right there. So you got the faith. Great. May stall out at 269. That's the only thing I could really do on that chart. I don't have a roadmap line. I don't have history. This was a spinoff when they broke out GE into the different companies. Like GE Veranova, GE Aerospace, all the different GEs. So that's what we got. The traditional GE Aerospace here. Maybe like, well, it's the same chart. Kind of not. SMCI, still working on getting down to the abyss. RYAAY, resistance at the roadmap line. We've got a clear to go higher. This could be a measured bounce. That was a beautiful move up, a beautiful retrace to the 618. If we can break through that roadmap line, we could be on the path up here to 200. Be a pretty nice one. Bulls, BULZ. Resistance at the roadmap line. This is, again, FANG, microsector, 3x leverage. Leverage stuff doesn't always follow the pattern. Leverage cuts both ways. If we break out above this high, though, right over here, odds are we're going cruising. How high? Pull this down. Yeah, that's the, got to get through that gap right there. Gap down, that high. 215 could be the upside on bulls. Coin, nice potential bottom in place. I mean, it hit the target right on the money here on that extension down from the roadmap line. We've got to get back up to the roadmap line. That's it. Upside resistance is the roadmap line. We get above that, odds are we're going cruising higher. Might be the potential for a new all-time high. Might be. But 302, 317, 360 would be the intermediate targets. Probably get a consolidation off of that high right there. There's going to be traders. Believe it or not, there's going to be traders that have been sitting on this since 2021. I bought right here. I just want a GTFO. I just want to get my money back out. They'll probably sell when we get that spike. Probably get another correction before we can go breaking out to new all-time highs on coin. MSTR. This trades like leveraged Bitcoin, even though it is not. And it's just kind of doing a watermelon seed squeeze. If we can break out, I think we're going to see a pop. I have 10 shares of this. Full disclosure. I have exposure to coin in CONL. Leverage coin. I actually bought right here. I'm slightly underwater. Waiting on Connell. Waiting on coin to get out of the funk here. Had the faith that we're going higher on crypto stuff. CRWD. There's the resistance right at the roadmap line. Upside resistance, downside support. SMH. Now, how did I make this list? I went and pulled pre-market movers, everything moving up $2 went on the gainers list, even though now it's, like FTEL is down. Everything that was $2 or more up, I put on the gainers list. Everything that was $2 or more, I put on the decliners list. And I don't update it as I come live because I'm sitting here talking to you. So SMH has that potential, measured bounce, roadmap bounce, rocket ship pattern, this 300 area potential target. But it also can fail here if that is this is the failure scenario right here. Retrace, hold that 618, turn down, break down below this low, probably coming on down lower. So that's the failure option right there. FTEL, like I said, it was on the poppers list. Now it's starting to be on the droppers list. Failure to launch here. This high, this low. 618 resistance right there. We break above that, get the daily close above that. We could potentially rally up to 44. The statistics on this one have none. No history of doing this because I guess the IPO was right over here. Initial publicness. Now, speaking of that trade right there, I do have bonus trades I brought today. Some bonus trades. Stick around to the end. Got a few bonus trades. SOXX, stuck at the roadmap line. This one could turn down. This is like could be a measured bounce that way. Which way? It's like, JT, which way do you know the fibs are going to work? That's the thing. I don't ever know for sure. It's which way. So this is kind of set it up. We've held support here at a fib level. And we're holding resistance here at a fib level and the roadmap line. That's a little bit of a coin toss until we break above this 618 up here. Got to break through that. Got to break through that. That's a double confirmation that we're probably going up here. That's why I say wait for them. Wait for the confirmation. You could buy on faith that we're going to do it if you believe, but know where you're wrong, all right? It's not being wrong that costs you big money. It's staying wrong. Like if you're counting on this to break out here and then break here and we get a rejection here and we break below that, you're wrong. Now, if you stay wrong, you're going to ride it all the way down here. If you double down here, then you're really screwed when we get down here. And that's where staying wrong costs you big money. Because that doesn't have to be the bottom. It can bounce here a little bit, hit the roadmap line, and go down even further. Drop off the bottom of the chart. All right? Don't stay wrong. It's not being wrong that costs you money. But take strategic shots. Know where you're getting out. Know where you're pulling out. Like I got in that trade aggressively. it's not doing the thing, I'm out. And you don't look back. You don't be like, oh man, now it turned around next week. Like, it's done. Like, you were wrong. Don't look back. All right? Everybody clear on that one? That's a big mistake I see over and over in traders. Be like, all right, I know it's breaking out. I'm buying now, going big, gonna make a bunch of money. We got the 277 target up here. We come up here, you're like, all right, add to it, break down here. You're like, uh-oh, well, my cost basis was really high, so I'm gonna add again, double the double. So now you're running like 4x, right? I've watched this so many times. Anybody that's hung out with traders long enough, you've watched somebody do this, right? And then all of a sudden, now you're riding 4x your normal size, and you're down like 50 points. Ooh, that's a bad spot to be in. That's where you get big losses. That's a big loss, right? Now, if you added here and it kept going, that was a smart, like, you did a good play. You took a calculated risk, added to it, and you got there. So, but once you are proven wrong, don't stay wrong. TCL need to break above that high. This is kind of like all of these got that same pattern. Kind of at that resistance, found that support. I want to see that break higher. These are all leveraged tech stuff. 3x bulls on technology. We got semiconductors and tech all kind of presenting the same pattern. Dell, now this is looking a little better on Dell. Look, we did that potential measured bounce right there. I say potential because it hasn't followed through yet. We are getting a little bit of red there. If we can see that continuation, get through the 618 up here. Targets are way up here, like 220, 230, 240. Pretty spicy on Dell right there. FERG. Ferguson. Nothing solid. Like, I do like the fact we've kind of double bottomed there with a slightly lower low. We're going to have to break out through these highs right up here to really prove we're going higher. That high, that low. There's a 618. That's a somewhat conservative entry if we get a daily close above that for a breakout up here, possibly 231, 237, 251 up there. BNTX keeps being ridiculous. This is probably going to retrace at some point. I was talking about this yesterday, how this is probably the major resistance. If we get up there, people are going to sell. They bought. They're ready to GTFO. That can create a large retrace into this zone right in here. If we get up there, just take one big shot up. It'll probably come right back down in this area right there. Now, I'm not saying it's going up there. It could fail anywhere in here. We're at this prior high right here. So watch out. Nail. That's probably going for that 172 target. I've talked about that for a couple of weeks. 172 is the target. Even though we got the deep retrace, doesn't matter. 172.90 app. That one's just launching off. Next fib up, 130. ARM. So here's the resistance. Here's support. Gap fill. Got it sitting over here. Been expecting that gap fill at the minimum. If it breaks below that, we could make a new lower low down here around 30. We'll see. No trade for me on ARM. No high probability anything. Carvana. Move that up to the high. Move that down to the low. This is a 4-hour bounce. Right there. 164 is the target. Right there. NVDU, leveraged NVIDIA. This has got that conflicting pattern like I was talking about on the technology leverage stuff. Did a deep measured bounce right there. Let's erase this. We got down to that target. We've got the deep measured bounce. Now we've got this high. We've got this low. We're coming up. Haven't been able to break through that resistance on the upside. Found the support. Found the resistance. So where are you wrong? If we break below that, pretty much, you're probably wrong. And we may go down here to 40 on NVDU, 2x leverage on NVIDIA. Shopify. Back up to the daily chart. That's a daily entrance, right? I mean, that's a daily trade right there. Confirmation. Break above 78, 79. I've long held that this might be set up to rock and roll higher. That bigger target up here at 160. I don't know. It could take a long time to get there. It looks spicy for going up, but not feeling it at the moment. It's not that opportunity to jump in right now. I do like the fact we've done this. I do like the breakout, the retrace. Yeah, that's what I will. Okay. I was like, there's something on here. It's that gap down right there. We're sitting there. We haven't broke through it. I was like, there was something on this chart that was keeping me from buying. It's that gap right there. Got to get through the gap. ILF. I think we're going on down just a little bit lower. 98, 99. Somewhere right there, around 100. One more little flush. We got close, about 10 points off. Right there, PITR, PTIR. Oof. 2x on PLTR. PITR. PTIR. I can't even say the letters in the right order. That just indicates nothing. Airbnb, potential, measured bounce. It's going to have to break above the roadmap line all the way up here. All those gap downs, going to fill all that stuff to convince me we're going higher. If we break down, watch out below. Decliners, NUVL. It's a biotech that was popping. I don't know. Did a ridiculous pop yesterday. Probably going to take it back. That's the way biotechs work. Team consolidating under the roadmap line may extend lower. I'm not sure we're finding a bottom yet. This broke down out of a channel and can make a lower low, lower than this low right over here. TM, Toyota Motors, has a measured bounce in place, but no continuation so far. Rallied up, retraced. That's a nested measured bounce potential. Gonna have to break through the roadmap line to go higher. So resistance is right here. TIL. Well, we've talked about this a couple of days now. We're probably coming right back down. Probably coming right back down. NUE, that's hunting for a bottom. As it broke down out of an uptrend, watch out for a deeper retrace. That's what I got. SBIT, short Bitcoin. Like I said, this is a chart that looks like it's going lower, which means Bitcoin would break out and go higher. This looks like we're going to break out the bottom. Lower highs. NVO, or Novadisk, is just consolidating on the roadmap line. Lily chart looks a lot better. Consolidating up here and needs to get an extension up to 1,000. All right, bonus trades for the day. ACO, Excel Entertainment. Let's grab pop these babies up. That was the wrong. Where? All right, I loaded it right here. Okay. Open the browser, copy. Let's talk about the statistics on this baby. Make it bigger. So here you go. It has a 12.94 target, profit potential of $1, basically 83% likely based on the history. And it's only 6 trades since 2017 though, so not a statistical population. Why am I pulling up here instead of using the tool? Because this is all summarized for me with a chart that highlights the high, the low, and the target all right here automatically. So we had a close right here. This was not a close. That right there was not a close above. So there's the close above. So when we go look at it on this chart right here, we're talking about this high right there, that low right there. There was the close above. Here's your entry today. Looking for the 12.94 target right there. I know it says 12.92. I didn't draw it perfectly, so I use a tool to tell me the exact numbers. Next up, KOF. KOF. And let me grab the statistics. Maybe like, well, that looks kind of choppy. It's okay. We'll talk about it here in a second. So here we go. We got that high right over here. It does look a little choppy, so you may maybe not like it. There's the low right there. Here's the break above the 618. That's the confirmation. There's the target right there. That is $4.83 up. It's 80% likely over 20 trades since 1993. Not too shabby. 2.7 on the profit factor. And they typically last about 39 trading days right there. This one, we're talking about this high over here, this low over here. That 94, I missed it a little bit. It's 94.14 is the target. There's the entry. Looking for that upside right there. Right there. And 39 trading days. How long is that? Goes from here. You just pull the bar. You're looking for bars, all right, not days. Why bars? 39 bars is 55 calendar days. You'd be like, wait. I thought you just said 39 days. Weekends, all right? Weekends don't make candles. So you got to have a tool that goes out there, pull it out, 39. So if you're buying options or something like that, if there were options available, I don't even know. You got to be at least 60 days out, if not more like 120 days out, and give it twice the length of time, all right? An average is just an average. It can be above average or it can be below average. It can go faster than the average or it can go slower than the average. The average is just an average. So, and then the third trade, KEX. Oh, that's a nice bounce right there. I like it. That close above right there. See, this was the first candle. Closing above. The entries today, right there. And the target is off the screen, right up here at 135. That's a pretty nice upside potential right there. Save this biggest one for last here. Let's grab that. Grab the statistics, pull them over. KEX right here. Look at that, 14, almost 15, 14 and a half on the upside. 14. That's a nice one. 87.5% of the time it's worked on 40 trades since 1976. This has been a pretty reliable trade. Pretty darn reliable. Profit factor, 2.89. This one might be worth putting a few bucks on. All right. I'm not saying it has to work out. It's failed 13% of the time. That's a pretty high probability, pretty nice potential to go right up here. I may buy some shares on this. I kind of like that. Now, the length of time, 40 trading days. So here's the first day one right there. 40 trading days puts us out right there. Could go twice as long. 80 trading days puts us right there. 115 days out. January. So you may be in this till January. Could be in it even longer. Could be 3 times the length. Could be 120 days trading days. Never know. All right, that's 3 bonus trades for you. Set up today. They look pretty bullish no matter the market. So pretty darn good. Let me know if you like those trades. Let me know if you take them. So, all right. Yeah, the candle maker doesn't work on the weekends. That's right. That's exactly right, Don. All right, everybody. I am going to be live at 5 p.m. today doing 30 minutes of awesome. I can't do it without you showing up. So please come and participate. That's the only day, only time of the week, only show of the week I do your requests for at least 30 minutes. Usually lately it's been an hour. So come check it out. I'll see you tonight, 5 p.m. Like I said, I'll be live at 1 p.m. with Roger. I'll throw that in Discord. 5 p.m. back here on YouTube. As always, come watch me. And I'll see you later. See you at 5.